viewers, welcome to Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get to business. Former Minister of Finance, who is as well the MD's legislator for Harare East, who presides over the Party Committee on Public Accounts, Honorable TENDAI BITI, has called for the re-dollarization of the Zimbabwean economy. Honorable BITI said the economic fundamentals were pretty much in a weak position and therefore dictated and required for the re-dollarization of the economy. With a close-up with him this afternoon, let's have a look.
Let's join the Rand Monetary Union. In fact, let me be very clear. Let me be clear.
That is pretty much a process.
Let me be clear. First, let's restore the US dollar. Let's restore the regime of multiple currencies, because our people are used to that. But in the long term, which is a process, let's move to the Rand. Why do we want to move to the Rand?
Just to stop in your tracks there, if then we were to come back to the US dollar, would that not perhaps choke our capacity to actually export and bring us to the widening trade deficits that Zimbabwe has been recording over the past few years? 2018 with a trade deficit of $2.5 billion, 2017 a trade deficit of $1.7 billion. So how do we balance the matrix there?
Yeah, it's a pedestrian argument. It's a pedestrian argument. We've got a low productive base. We've got a very low productive base. And because we've got a low productive, because we've got a very low productive base, the current status quo of a deficit between our current account, a deficit between our imports and the exports will continue. But the advantage of using the US dollar when we have got a deficit already is to make our imports, is to make what we bring into Zimbabwe cheap. The Rand is cheap at the present moment. 1:15, 1:14. The Chinese devalued the yuan only 2 days ago, and the Americans are angry. So when we use our US dollars and we are a net consumer, we are a net importer, it means that we'll benefit because we are consuming. We are a huge supermarket economy of South Africa, of China, of the United Kingdom, of Singapore, because we're importing our fuel through. So a strong dollar will help us because we are still importing more than we are exporting.
Now, Asa Resources, which owns a controlling stake in Bindura Nickel Corporation, has found a local acquirer. This is according to a statement released by Bindura Nickel Corporation, a cautionary statement which actually says that shareholders are advised that the ultimate holding company of BNC Asa Resources has entered into a sale and purchase agreement with a third party in relation to the 74.73% shareholding in BNC. Now, here are the details with regards to the acquirer. Not much detail has been given, but this is what we know for now. The third party is a Zimbabwean-based mining entity with interest in the mining and production of ferrous metals, non-ferrous metals, and precious metals. We're to close up with the Chief Executive BAT just last week on the potentialities with regards to that particular disposal. Let's have a look.
Lastly, can you shed light in terms of your separation from Asa Resources, a hold, of course, of a significant shareholding in Bindura Nickel, and as well as the potential acquirer of that particular stake?
As things stand now, ASA still holds 74% of Bindura Nickel Corporation. And as you are aware, ASA is currently under administration, and the administrators have been trying, they are still trying to dispose of the ASA assets, which includes BNC. And as far as I'm aware, they are still in the process of doing that. There is no definitive new shareholder coming yet. But there are a lot of suitors who have come, who have done due diligences, and I think the administrators are still looking at that.
Last, as economic pressures continue to rage in the country, ECONET, one of the biggest companies on the Zimbabwe Stock Exchange, has hiked data as well as SMS tariffs. This follows, of course, several other companies across the board that have made such similar moves, particularly Tel One as well as as well as Tel One, of course, as well as Net One, have hiked their fees in recent weeks. Now, this, of course, would be the SMSs that have been sent across the board by SMS stating, dear customer, please take note, bundle prices for data and SMS will be reviewed effective the 9th of August 2019. And of course, tomorrow we should see the new pricing thereof. And as I mentioned earlier, this was today's transition in terms of the pricing for Net One, with 40 megabytes of data going for $1.50, which is a daily data bundle. For the one for a weekly would be 28 megabytes at the price of $1.50. In terms of the monthly, 12 megabytes at $0.75, which is the monthly bundle in that regard. And then of course this would be the social media bundles at 20 megabytes, 75 cents daily, 90 megabytes for your WhatsApp at $3 per week. This of course would be how the story has developed in that regards. Chinese state-owned bank China Everbright Bank blacklists Zimbabwe. This comes as the country grapples with a huge debt, which is of course an international one. Now this concludes our evening news bulletin. Up next is a look at the news in News Review. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balance. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Take test.
Welcome back, viewers. It's now time for a news review, and with me on set is economist Tinashe Kadu. Tinashe, good evening and welcome to the show.
My pleasure, Eben. Good evening.
Fantastic. Well, let's get the ball rolling. Former Finance Minister Honorable TENDAI BITI is calling for a re-dollarization of the economy. He says our economic fundamentals are pretty much weak. What is your comment with that particular stance is concerned?
You look at the problems that we are facing as an economy. I don't think we have monetary problems per se, but it's actually deep structural problems that are manifesting in monetary form. That's why we are experiencing that. The structural problems are all a result of weak institutions. When I say weak institutions, I'm meaning weak laws, weak even regulations, weak institutions, that push a certain policy framework. So to say, let us dollarization or let us revert back to the use of the US dollar. Yes, it might be an option. It will give us, that short-term stability, but in the long term it's not sustainable. You look at what we did in 2009 when we dollarized. Yes, we experienced that stabilization from 2009 to 2013, but to me, if you look at that stability and the growth that we experienced in that period, it's not a result of that use of the US dollar per se, but it was more of a result that everyone in the economy had a clean balance sheet. Your debt had been repaid, by high inflation that actually eroded all those obligations. So everyone now had a very clean balance sheet. Then you find that consumption from that period, from 2009 to 2013, it was actually driven by accumulation of debt. Then from 2013 onwards, that debt was actually starting to choke private consumption. Then you also look at that period, we actually implemented more liberal policies where we opened up our borders for all imports. That's a period where we had an influx of even things that we could manufacture locally. People could go and borrow and buy furniture from as far as Hong Kong, Dubai, and something like that, which were not necessary for the economy. So that's where my fear is. So right now, if we revert back to the dollar, you look at individuals and even corporates, their balance sheets, they are not clean. They've got huge debt overhang. And I think the dynamics at play won't be the same as the period that we experienced during the 2009 and 2013 era. Then you look at businesses as well. They were the first to complain that the use of the US dollar is no longer sustainable. It's actually increasing costs. It's not competitive. We are losing out to competition and something like that. So reverting back to the dollar, I don't think it's a good policy. I think the best policy is for us just to fight, towards having proper and efficiently working institutions. Then if you fix that, any other currency that we might use as an economy, it will be a success. Even the ZIM dollar will be a success if our institutions are strong.
But he is not so much in support of the US of the ZIM dollar. He says let's get into a re-dollarization. Then after a few years we get to be a part of the Rand Monetary Union, and he believes that that would actually present more benefits for Zimbabwe than, reintroducing the Zimbabwean dollar. Your take?
You see, my problem is, yes, there are benefits to it of getting into the Rand monetary union. Maybe if you look at only a socialist, perspective, where you would be thinking in terms of what you are consuming, you would be just saying, okay, if I join the Rand because we import from the Rand, you are thinking of, you are thinking through your stomach. Yes, you would get, those commodities cheaply, and you would be able to feed yourself. So you find certain policies which are towards or are centered towards, increasing imports. I think it's just a result of, a reaction, to the hunger levels and poverty levels that we're experiencing as an economy. But to support production, I don't think, getting into a monetary union with a stronger economy like South Africa will be beneficial to us. You look at South Africa, it's more competitive in terms of producing anything. So our production base will be actually inactive. I think will be turned into a supermarket. South Africa will do all the production, then us as Zimbabwe will be doing all the consuming and the buying of those commodities. Yes, on a socialist perspective, I think you would say, yes, it's fine, because I would get, cheaper cooking oil from South Africa, then with my family, I'll be happy. But you look at a broader picture, as a nation, you would want employment, you would want to create employment, you would want tax revenues and all those things. So if you look at it on a broader macroeconomic perspective, I don't think that policy as a nation, in terms of the stage of development where we are right now, I don't think we are prepared, joining a monetary union with a bigger economy like South Africa. So to me, the policy perspective that we should pursue as a nation is for us to work on cementing the strength of our institutions. You look at the recent comments on social media where people are saying the finance minister wasn't prepared, to allocate that closer to 3 billion towards combined agriculture. He's saying that it's a policy that came directly from the executive, then he just included it in the budget. So if you look at those things, that's why I'm saying our institutions are weak. If our fiscal framework was very strong, if RBZ was a very strong and serious institution who could see it, providing a checks and balances to the government as far as those public funds and fiscal resources are being managed.
Interesting. Now, interesting development. Bindura Nickel Corporation issuing a cautionary statement that there is a taker of the 75% stake that Asa Resources has held.
Yeah, that's actually a positive development there for Bindura. We have seen even over the past issues to do with ownership and it looking for an active investor. We have seen even its share price underperforming when comparing to its peers. Then we have also seen even in terms of expanding its capacity. I think it's only operating just one mine, which is your Trojan. Then there's other developmental projects like your Shangani, your Hunters Road, which are some of projects that are in the pipeline. So having a taker there, I think it's positive for the company, and you might see nickel production maybe tickling upwards.
Any idea who this new acquirer could be? For all we know is that at the moment it's a Zimbabwean mining concern, and with the hints of perhaps what it is that they're producing. Any?
So far I don't have any, but you find that the newly formed the Zimbabwe Consolidated Diamond Company, I think it's one of those companies that has been looking for opportunities even outside diamond. We have seen it looking for opportunities even in platinum, opportunities even in gold and something like that. But I can't say per se that it might be the taker. For now I don't have any clue.
I realize. Okay, now just very quickly and briefly, ECONET hiking data tariffs. Yesterday we saw Net1 doing the same thing. I mean, what does this mean?
everyone is hiking, prices. That's where we are, where there is carnage in all markets in terms of pricing. And one of the major drivers of that is the signals, like what we discussed yesterday, being sent by the government itself. So to me, it's the government's policy that is actually, driving all this turmoil that we are seeing in the markets. If the government takes full responsibility and full accountability of all the actions that they are undertaking, we might see prices, starting to respond even positively to certain policy measures. But what we should stress first is stronger and working institutions, then market reforms later. We are seeing a government which is much more concerned in reforming markets, but the underlying problem is, the elephant in the room is those weak institutions. So if they fix those institutions, I think you would see the market even responding positively.
Interesting. Now, Chinese state-owned bank China Everbright has blacklisted Zimbabwe. Would you want to shed more light where that particular development is concerned?
You look at Zimbabwe, it's a country, I think now which have got, a checkered history as far as, honoring foreign obligations is concerned. We are struggling, to service debts, and even local banks, they are also, struggling to service, those borrowed funds and those debts. So I think this is what we are seeing, where those banks that have extended, a certain line of credit or a certain funding to local banks are now restricting, certain services to local banks. I think the problem that we would have as an economy, especially like now, where we would want to have, as much funding as we can, and a bit of positive perception there from foreign investors. I think such developments actually weaken our position, and even negotiating some bail packages. You look at a government level, we are still negotiating with the IMF for a certain bailout, which means that if maybe we successfully implement those set targets and benchmarks, then we successfully complete the staff monitored program, maybe we might start negotiating with the IMF for a bail package. But things like this, where we have got certain debts that we are owing with other institutions, and some of like your bilateral sort of debts or sort of arrangements, they actually weakens or compromise the negotiations that we might have even with those Bretton Woods or institutions. We have seen the case, for instance, of Mozambique, when it wanted a bailout package from IMF. There were issues that actually came to the front of hidden debts, that the tuna fish debt, and that state-linked company, where Mozambique had as much as 2 billion in hidden debts. So for Zim, we have seen us sort of using our mineral resources as guarantees for certain loan facilities or for certain debts. So all those things, I think would have a negative impact as far as our negotiations with those Bretton Woods institutions is concerned, in terms of an economic bail package. But for the banking sector, what I've said earlier, I think it's a move by those Chinese linked banks, where they are now trying to de-risk from us, trying to limit their exposure from Zimbabwe, because Zimbabwe is proving to be a problem child.
Okay, Tinashe, thank you so much for the perspectives. Thank you guys for staying with us. Up next is a look at the stock markets and markets daily with Anesu. Please stay tuned.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Chimbungu, and let's get into it. Now, the market has continued on a downward trend with the Old Mutual counter actually now surpassing the psychological 2,000 cent barrier that it had not surpassed in quite some time. Pretty much actually over it's the highest it has gone since the dollarization. Now we do realize that this is much to do with some investors putting into effect, or rather saying that the 90-day vesting period is a non-event towards them, also based on the perception on their outlook towards the Zim dollar. Now, just for us to look at our much broader market, industrials index and the all-share index did drop by about 1% today. The top 10 index did come off today as well by a larger margin, for much consequent to an ECONET, Cassava and Insco dropped today, which were 3 of the 4 laggers that are on the stock market today versus 5 risers. Now, within the risers, the top riser today was Old Mutual, which I did mention did go up again today, registering a 14th session running now with it going up. It did add about 3.95% for it to settle at 2,073 cents, 2,073.23 cents today. Now, on the other end of the yardstick, ECONET did come off quite significantly, which pretty much has caused for the dampening down, because I mean we are looking at ECONET and Cassava being 2 of the 3 largest counters on the stock exchange, and then Insco does come in within the top 5 counters on the stock exchange. So it pretty much, those 3 counters have pretty much caused for the dampening of the market today, even though our market breadth was pretty much in the positive today as compared to the previous trading sessions. Now, quickly onto our forex market, Old Mutual implied rate is now at 16.92, and this premium gap between it and the official RBZ exchange rate, which is at 9.7 as of close today, has pretty much caused for investors to keep on pushing their money towards towards the old mutual stock there for them to enjoy such kind of a premium. For the parallel market trades that were as high as about 10.9 were witnessed today, but we did settle at an average of about 10.8. Now, don't forget to like, follow, and subscribe our YouTube, Twitter, and Facebook accounts at Equity Access, and do remember to contact us on aaronc@equityaccess.net for the economic Q2 economic review and outlook paper. Paper has got a lot of talking points that will